Good morning, traders. I'm Dee, and I'm excited to be here with you this morning on the Pirate Traders Morning Show to share the important news for the day so that we can make our P&L raise as high as it possibly can. So let's get into the news. U.S. stocks are on course for their best week of the year after reassuring economic data. SpaceX is launching a methane satellite, and the yen carry trade is back. Here's what markets are talking about. U.S. stocks are on course for their best week so far this year after a flurry of data spurred optimism that the economy will avoid a recession and is heading for a Goldilocks scenario of contained price pressures and resilient growth. The S&P 500 has rallied 3.7% this week, while the tech-heavy NASDAQ 100 is up more than 5%, the biggest gains for both indices since November. Asian stocks also headed for their best weekly performance in over a year, led by Japan as a weak yen boosts exporters' earnings prospects. The currency is set for its sharpest weekly drop since May. Easing fears that yen-based carry trades are unwinding. Nomura has seen a variety of investors start borrowing the yen again to invest the proceeds elsewhere in higher-yielding assets, suggesting corporate clients and hedge funds who have been enthusiastic carry traders are getting back into those deals. It's been a brutal week for iron ore, which hit the lowest level since 2022 on concern that steel mills in China are cutting back output due to the lackluster demand and sinking product prices. Supplies from miners have also remained robust. The steel ingredient has lost almost 9% this week, the most since March. If these weak prices persist, it'll be a challenge for the highest cost producers as their operations risk becoming unprofitable. In other news, Bayer shares jumped in Germany following a significant win in long-running cancer litigation over its Roundup weed killer. A Philadelphia appeals court said federal regulations governing the pesticide's warning label supersede laws under which a Roundup user in the state claimed Bayer's Monsanto unit should have warned them about cancer risks. Also in the news, SpaceX is launching a methane satellite to hold super polluters accountable. The Tanger-1 satellite, scheduled to launch this Friday, will be managed by a nonprofit carbon mapper and will make the data available once it's operational in the coming months. In other news on consumer health, Walmart shares rose 6.7% after the discounter boosted its annual sales and profit forecasts, and second quarter results beat Wall Street estimates. While traders have been on the lookout for signs of economic weakness, CFO John David Rainey told CNBC that Walmart has not seen a shift in consumer behavior. We see among our members and customers that they remain choiceful, discerning, value-seeking, and focusing on things like essentials rather than discretionary items. But importantly, we don't see any additional fraying of consumer health. In retail sales, consumer spending defied expectations in July, with retail sales jumping 1%. Significantly higher than the 0.03% forecast. United Airlines CEO Scott Kirby expressed renewed confidence in Boeing's recovery after meeting with the plane's maker new CEO. United, which has 484 unfilled Boeing orders, has expressed frustrations about the aircraft maker's troubles. As legacy media companies vie for both viewership and profitability in the streaming wars, CNBC's Alex Sherman uncovers the inside story of what drove executives at Comcast's NBC Universal to splash out $2.45 billion annually for 11 years to secure the NBA games. So now I'm going to bring up our charts and let's talk about our pre-market analysis that we discussed a little bit on Wednesday. So going back to looking at window trader, let's take a look at what happened yesterday. I hope you guys all got on the train early and were able to catch the incredible move at the beginning and the opening of the market to the upside. Now, what clues could we have seen that told us this was a big possibility? As you can see with this big white bar right here, this is the gap. This was the gap that we had at the opening part yesterday. And you can see here's the opening price. Circled, this is this green dot is the opening price. Now you can see at the open, even though the overnight inventory was very short compared to the settle, it barely touched in the overnight inventory. It turned around right away. And as you can see from these volume bars here, for those of you that have that on your window trader software, you really want to watch for that taper of volume here where it's the black volume. As soon as that volume tapers on a gap day, as Jim Dalton would say, just get on that train and go and be ready for it. Most gaps that are this big do not fill on the same day. So maybe they fill halfway. I think it's like 60% of the time they fill only half of the way. So I wanted to show you what I was looking for yesterday. As you can see in the A period, there was a big move to the upside. And you can see it single printed out of the overnight inventory. So whenever we open, it's always a good indication if it only dips down a little bit into overnight inventory that it's incredibly bullish if it single prints out of there, which it did. So you can see we had this pretty large buying tail. Then I also marked on my charts, we had 2 single prints left over in the B period. Those single prints also signaled that momentum was very strong to the upside. That's the sign of single prints. And then we one time framed higher, B period, C period, D, E, F. We only stopped one time framing in the G period, and then we basically consolidated for the rest of the day. So I wanted to show you on my candlestick charts, for those of you that don't have Window Trader, how looking and having a really large perspective and not being stuck in the smaller timeframes can help you and improve your P&L. So I'm going to pull up. This was a screenshot I took yesterday of the 60-minute candles. And as you can see on the 60-minute, we have these really large green bars and hardly any wicks at the top or the bottom. So in this time frame, we can see, like looking back, hindsight is always 20/20. But on the larger time frame, the 60-minute candles, it was incredibly bullish. So you really only want to be taking trades in the long direction. So let's go look at the 30-minute candles. Again, you can see there was a reversal candle down here at the bottom. I think that was at the open. And that reversal candle was a really good signal. Even if you had gone long at the top of the reversal candle, look in the B period, how strong the buying was. Such strong buying in the B period, and then it continued all day long. I like to trade consolidation patterns like this candle pattern. And I wanted to mention for those of you that do look at candle flag patterns, when you have the pull, this is called the pull, it's really likely, I think it's 60% likely that it will break to the upside in the direction of the candle. Now in this case, you can see it did not break to the upside, it broke to the downside, but I just wanted to point that out. So on the 30-minute candle, you can see how bullish this is. Then let's go to the 15-minute candle. Again, this is really telling. And after only 15 minutes, you can see this big reversal candle. And then the second period in the A was a super strong buying candle. So in the first 30 minutes, you know, you only want to be taking long trades. Now I want to talk about the 5-minute candle. I'm a scalper. So when I first started trading, I really was only looking at the 5-minute and the 1-minute candle. But I want you to recognize how on the 5-minute candles, there's a lot more noise. You see some pullbacks. You see this candle, this flag pattern right here. It did this time break out to the upside. And you can see the buying continue all the way through the end of the day. One thing I wanted to mention that might help you in your trading is I've really noticed when I go back and watch the day at the end of the day, I do that every day and take notes of things I might have missed. I always notice that between 9:15, 9:45, there's usually a consolidation pattern almost every single day. And this is, I think, what we call chop. This is part of the chop in the MB period. But a lot of these consolidation patterns that happen usually in that half hour are things you just really want to sit and watch the consolidation, watch it form, and then hopefully you can catch the breakout. And that breakout is usually indicative of the direction of the rest of the day for the market, in my opinion. And then this is what I really wanted to show you, the 1-minute candle. I know a lot of scalpers love to use the 1-minute candle, but look at all the noise. I mean, obviously the direction is still bullish, but it really gets choppy and much harder to understand who is in control of the market if you're watching the 1-minute candle. If you're watching every tick, it's going to be very stressful and very confusing. So I believe that if you can just keep small charts open on the bottom of your screen of the 15, 30, and 60-minute candle, it might help alleviate any mistakes that you might see here on the 1-minute candle, which I think is too small of a time frame. So Charles, what do you think about this idea of the longer time frames and trying to see the forest through the trees?
I agree with you completely. I think I also think it's a case by case basis, right? So for some people, like you talked about kind of zooming in and zooming out and looking at different time frames. For me personally, I find the more I do that. So like, let's say I zoom in and I look at like 5-minute candles, and then I zoom out and I look at hourly candles or whatever, it starts to mess up my perceptions of things. So for me, it's best to just pick the candlesticks I want to look at and look at them all day, intraday, every day, the same way. I like, if I'm looking at candlesticks intraday, I like to use the 15-minute candles. Those work well for me. Or if I'm looking at it as a swing trader, the 4-hour or the daily candles tend to work really well. But I agree completely that a lot of success in trading is finding ways to almost trick yourself, to almost trick your own psychology, to not fall into mistakes. And one of those things that I think is very, very helpful is managing whatever time frame you operate on and not, like you say, getting all that noise. If you find yourself confused in a moment, let's say you're looking at hourly candles and you're like, what's happening? I got to zoom in and look at the 1 minutes to see what's happening. You're going to end up throwing yourself off. Right. You're better off just saying, I'll wait for more information from the hourly candles before I change my mind about what's happening with the market.
Right. Now, I also wanted to bring up this idea of waiting for the back test. Like if you can see this candle, let's go to a higher, let's say on the 5-minute or even on the 15. That's interesting, Charles, that you trade the 15. My big charts are always 15-minute candles. I just have small charts of the bigger time frames in case I want to check out, if I'm not sure where the momentum really is. But another thing that was really hard for me to learn is to be patient enough to wait. Once you see right here, you have the candle, you have the breakout, you can get a good scalp on the breakout. But if you really are patient and you wait for it to come back down to that retest, that's where you really go long, right? I mean, that's much more secure.
Oh, absolutely. And it's a complete change in success of trading if you buy dips. Right. You know what I mean? So you wait for the market to break. And then you don't say to yourself, I'm going to chase price up. Right. You say to yourself, I know price is going up. I know the market has momentum. Let me wait for it to come back down. Now, sometimes it doesn't come all the way back down perfectly to that level where you want to enter. And then you might have to chase a little bit, right? Like it comes down, you want to enter support right here and it comes almost to it and it starts to go back up. It's like, okay, well, fuck, now I just got to enter market here. I don't get quite as good an entry. But by waiting for that dip, what ends up happening is the trade goes in your favor immediately, as opposed to when you chase the price, a lot of times you enter the trade and then it dips. And so even if it doesn't take out your stop, it's a shitty experience because you're sitting there and you're stressed out and you're like, is this trade going to work or not? Whereas if you wait for the dip, you miss trades sometimes. That is the trade-off. Sometimes you don't get in. But if you wait for the dip, once you get in, the market generally moves right in your favor and you can relax. And I'm telling you, over a career of being a trader, if you're trading from a position of more relaxed, calm, what Jim Dalton calls letting the trade come to you, not forcing your way into the trade, but let it come to you, it just makes trading so much easier as a job. I totally tell people, first you wait for the signal from the market, which is the breakout, then you buy the fucking dip.
So I would like to ask you a question because when I was a new trader, I struggled so much on trend days. And Jim Dalton used to always say, just get on that train, get on that train. And I hesitated. And then I was chasing price and I missed the move. And I found that my worst days were trend days. And that was so frustrating. So I'm much better at it now, but I still think it's really difficult because price moves so fast in the IB sometimes on trend days that it's very hard to get in early because you're looking at that gap and you think, oh, the gap's going to fill, and then it doesn't fill. And then you're like, what do I, you're like, oh my gosh, do I get in now? Do I wait? And it's just, it's hesitation. Like I had such an issue with hesitation on those days. So I don't know if you have any advice about that, but
I do, but my advice is not easy. It's not a simple fix, which is that you have to train yourself to know the difference. To say, if I'm looking for a trade that is a momentum trade, you have to train yourself to say, I got to just get in that fucking trade. Right. And then just teach yourself that the moment you see a reason for there to be momentum, you just get in the trade. it will work out for you most of the time. It won't work out for you every time. Like you say, a lot of times the market will make huge moves in the initial balance. It'll seem like it's going to be this massive big trend day to the upside. You'll get in and then bloop, instantly the market runs out of steam. It pulls back down and it goes sideways the rest of the day. And you're like, what the fuck, market? But that will happen less often. And that's sort of the trick you have to play on your brain to remind yourself that a majority of the time, when that train is chugging along, when the market has momentum, it will keep going. That momentum will keep going. Not always. And so you get in the trade, and if it doesn't work out this time, you have to be okay with that and let it go. Because what ends up happening is you jump into a trend trade, the market pulls back and it never trends, and then you don't trust the next trend trade. But you have to ignore that part of it. You have to ignore the times it doesn't work and just focus on the fact that it does work more of the time. So you should be always doing the thing that works more of the time. But while you're on the subject, I actually was just thinking, because you were looking at NQ, because you're an NQ trader. And you were talking about the low and you were showing it on Window Trader. And I was so confused because I thought you were talking about the ES, and I was like, that is not what the fucking market did yesterday. I was like, it made a fucking poor low. I was like, it did not give us beautiful, perfect taper and instantly move higher and bring in volume with the overnight high.
That's so funny.
So the question I wanted to ask you is, how do you handle, because I know you're listening to the Brigade live streams, how do you handle the difference when the ES looks like it wants to pull back to fill the gap? But like you said, on the chart, the NQ was clearly saying momentum right out of the gate. So how do you deal with the difference between the two?
Well, I spent my first 2 years trading. I only traded the ES, right? And I memorized kind of how it moves and the tempo because I'm a musician. The tempo is something I really pay attention to. And as a musician, for example, one time the Boston Symphony needed someone to sub in the most difficult piece in Western history of music. And so they flew me from Chicago there because the concert was the next day and there was no rehearsal and they knew I could do it. So my brain is just really trained to be able to very quickly see information and put patterns together. And for me, after 2 years, and I was perfectly successful with the ES, but I just started experimenting with the NQ, and it just fit my personality better because that's how my brain is for my other profession, right? Yeah. And so I just noticed I was making a lot more money with the NQ trades than I was with the ES trades. But, I still listen to you every single day, and it helps me because I think that, I've studied both markets intensively. I don't trade oil. I don't trade crude. I don't trade anything else. These are the two markets that I've really focused on for the past 3 years, like 8 hours a day. So it doesn't actually confuse me. Although I've noticed sometimes when I've asked you questions in the courses that I took of yours, we were a little off because I was talking about NQ in my question, and then you were thinking I was asking ES. So it's funny. But Jim Talton says this a lot too. It's really important to try out all the different markets because of our each personalities and the way our brains think. What works for me, the NQ is better for me, the ES is better for you, and for all of our other listeners, they may be trading crude. Who knows? But you really do have to find that one market. And I believe it's really better to be a master of one, like to really understand how one market works and study that one thing and become an expert at it. And I had a coach once that told me that too. He's an excellent trader. He's very experienced. He's been doing it for a really long time. And he was also the one that said, master one strategy at a time. Like he was like, find a strategy, back test it. And if that works for you, then you want to master everything about that strategy. How do you get in? Are you using limit orders? Are you using market orders? Like really master it. And once you have the data, you do the same thing. Take the trade every single time, no matter, even if there's conflicting information on Window Trader, always take the trade. And that's how you become an expert at it. So.
Yeah, I agree with everything you just said.
My 2 cents.
Yeah. The thing is, that's funny to me is you're talking about, your background is in music, right? And performing live in front of audiences. So you thrive under pressure. You thrive in the moment of having to fucking do it and have action. Whereas I come from the world of video editing, where the whole thing is about taking time and thinking things through and experimenting. And so it's so funny that I hate the NQ because it moves too fast. You don't
Yeah.
have time to make decisions. You have to just fucking in and out. It's not even just entering trades, it's taking profits on them too, because the
Yeah.
thing reverses so quickly.
So
So it's
quick.
like, I like the ES because I can take my time. I can wait for the thing. Like, I know an hour before the market even gets to the level that interests me, what it's likely to do when it gets there, what I need to look for, so that by the time the market gets there, I know, do I want to hit the buy or sell button?
Right.
So it's just so funny. You're right. You got to find the market that fits your personality.
That's really important.
Yeah,
Yeah.
that's great.
And I think since we're both also coming from the artists, artist, right brain thinking, creative side, you're creating your films and I'm creating my music. And I think we have a, a really interesting way of looking at things maybe differently than someone that comes maybe from the corporate world or a different, way of life. So the markets are for, I believe anybody can make a ton of money in the markets if you're really smart about how you pick the market you trade and how you go about
Yeah,
finding a
if
strategy that works with your personality.
yeah, if you're willing to experiment and try
Yeah,
all the different things to find the thing that's right for you. Because I would also say, talking about the creative thing, I think that's why both of us like market profile,
I
is
love market
because
profile. Yeah,
it's like our brains see it as a picture. So we're
yeah,
understanding what the market is doing as an image, as a picture, which is more of a
exactly.
creative thing. Whereas, like, some people, they're more analytical. Like if somebody was like an accountant before they got into
Yeah,
trading or whatever, they don't want to look at charts at all. They want to be looking at like financials and data, and like
right.
they want to, it's like you really got to experiment and play around and figure out what's right for you. And I think too many traders never get that far. Too many
Right.
people, they hear about a friend that made a bunch of money trading, or they see a post on the internet or whatever. They open up a brokerage account, they put, a bunch of money in, they trade for a month, and then they're like, fuck this, this is too hard, this doesn't work, these people are full of shit, blah blah blah. And it's like, you got to go through that experimental process of playing with different things to figure out what fits.
And I think a lot of people make the mistake because this happened to me when I first started trading. I made like a lot of money without having any clue what I was doing. Like,
Yeah, the beginner's luck.
yeah, the beginner's luck. And I thought, oh, this is so easy. Like, maybe I can stop playing the flute or whatever, and like all of a sudden I really started to study and back test and make spreadsheets, and I have all my strategies and which strategy works, how many, I literally have a pie chart that tells me like, and then I would do it on demo and 100 trades on demo. And then that gave me the confidence that no matter what I see, I know this works. I'm going to get in every single time. And
Yeah.
that's when things really changed for me. So yeah, this is a great discussion because I think trading is really, really hard. And I think people think, maybe they have beginner's luck like I did. Oh, this is so easy. I can just hop in and out every day. But the market will eat you up if you don't have those strategies and those statistics, right?
Yeah. And it's all
So
mental. That's the thing. It's like,
it's
you,
it's
because it
mostly
starts to
mental.
fuck with your brain. It starts to fuck with the way you think. I don't know what I'm doing. This is crazy. Like it just has a way of eating away at you. So it's, yeah.
And a perfect example of that is like you said, when we leave a balance area high or a balance area low, it completely gives you like fear that you don't really know what you're doing because it stays there for hours, sometimes hours.
Oh, yeah.
And it's going to break out, right? But then it drops, a couple points, it goes up and it consolidates. And then you get so tired and so doubting yourself that when it finally takes off in your direction, you're like, stop, you canceled the trade, you scratched it or whatever. That has happened to me a lot of times too. So now I know to have the confidence, just be patient, wait for the move.
Yeah. And if you do get shaken out of a trade,
Messes
shake it
with your
off.
brain.
That's what I'm constantly saying to myself. Like if I think the market's going to break higher and I go long, and then it does one of those little dips down where it
Yeah,
fucking
it
stops me
always
out,
does that.
and then I just go, fuck it, shake it off. It still looks like it's going higher. You know what this is. This is just a way to shake out the weekends. Get back
Yes,
in. And so
exactly.
re-entering in those moments where like you get in and you just got the timing wrong, you get shaken out, just get back in again. Because over a series of trades, over months and months of doing that, you will win more than you will lose, and you'll keep going.
Yeah, and it's like in performances sometimes, I'm 100% prepared and I'm nervous or something, I hit a wrong note, I'm like, "Oh shit." And if I don't clear my head immediately and move on, it snowballs and I start missing tons of notes, and then I'm embarrassing myself in front of 3,000 people, right? So
Yeah.
it's the same thing in trading, the same concept. Like you make a mistake, you get stopped out, erase it, and we're going to start over. We trust our strategy, and we keep going. Anyway, Charles, I know it's
Yeah, time is
8:25.
on our side. We got to
We got
extend this
ready.
conversation though the next time we do one of these, because we got to get into, you brought up back testing, which is great, and you brought up paper trading, which is great. So we'll talk all about that in the future.
Yeah.
Let me just
Cool.
really quickly blow through the ES this morning and my thoughts on it. Okay. So essentially, guys, last night at the end of the day, I was very nervous because to me, the market was bullish. It was giving me signals that it wanted to keep going up because we brought the fairest price to do business. Whether you measure that fairest price as where the market spends the most time or where the market brings in the most volume, that fairest price moved up to the high of the day. We also closed basically at the high of the day. It wasn't technically a spike up, but we'll consider it the same idea, a sign of momentum. So I was like, this is bullish. The market is telling me it's going to keep going up. It's telling me it still has momentum. But we left such an insane amount of weakness behind yesterday, not just with an unfilled gap, but also with, every single low. Every low the whole day was weak. So that was a bot-driven market where they were artificially pushing price higher, using previous TPOs as a level to enter. And so I was just like, this market needs a pullback. So then I log in this morning, I open up my chart, and what do I see that happened to have just happened right before? A liquidation in the overnight. So this puts us in a very good position for understanding what's going to happen with the market today once the market opens. The market opens in 3 minutes. I'm going to blow through it really quickly. Yesterday's low is a poor low. So there is a pretty decent chance the market will poke below it today. Okay? If the market pokes below yesterday's low and it gets new selling, they're looking to fill the gap. All right? That means the market needs a bigger pullback. This liquidation in the overnight market wasn't enough. However, that in my mind is less likely than the market either not testing the low at all, immediately opening and starting to push higher, or it look below and fail that overnight low, which is where it would poke, yesterday's low. It would poke below the low. It would poke below 55.27, but it wouldn't stay down there. It would instantly turn around and start to come back up. And by instantly, I mean within 30 minutes, right? So if we get either of those, we do not test the low at all, or we test it and we pull back up into the range, that is bullish. The market still has momentum. It can keep going. Okay. You have all the time and volume brought in at the end of the day yesterday and the overnight market, plus the liquidation that just happened like an hour ago, which actually strengthens the market. It squeezes out weak hands and gives stronger hand buyers a chance to step in. All of that is a reason for the market to continue its momentum to the upside. All of that is a reason for the market to make a higher high today than it made yesterday. But if it gets below yesterday's low, that momentum can instantly be over. So keep a close eye on 55.27. If we stay above it, I'm bullish. If we start to spend time or bring in volume below it, I'm bearish for a pullback to 54.88. With that, I will say goodbye and instantly head over to hang out with the people in the brigade stream. Goodbye,
Bye,
everyone.
guys.